These are the myths that we've got in the markets at the moment, that the market's going to go up 10%. Now, this is coming out by some of the big broking houses. They're all amazingly in line saying the market's, we're talking about the S&P now, going to be up 10% next year. I think that's a myth. I mean, we've had 2 years of very, very good performance. We're going into a year where there are a lot of uncertainties, more than ever, geopolitical. We've got wars, we've got Trump coming on, a lot of these uncertainties. So I think the 10% is a myth, and we actually won't see it. If I was going to put any money on it, I'd say we may be looking at a decline next year of around 10%. But by the same token, I'm not calling for a crash, because I think it's too early for that. The Fed has lots of firepower should the economics start going wrong. So my forecast for next year is that we're not going to see a 10% rise. We're more likely to see a 10% fall, but we're also not going to see a significant bear market. It's too early for the big crash to come.
Yeah, definitions here. I mean, correction would be down 10%. A bear market would be down 20. That 10% correction, though, would be probably much needed after the run we've had. I think you would agree. I'm interested, though, what do you think the trigger could be? Is it going to be? Is it when and if the 10 hits 5%?
Well, I have this theory that markets reverse at the end of every quarter. Now, it's not every quarter, and sometimes they don't reverse. But we're looking at an end of a year now that's looking very sluggish, where people aren't too sure. I wouldn't be surprised if we saw quite a significant fall in the early part of the year. And we saw this in 2022, where the market fell substantially in the first quarter. And then it took quite a lot for the market to catch up towards the end of the year. You know, it lost all that value early on in the year, but it did try and catch up a little bit after that. I think that's the kind of model that we're likely to see, mainly because it's difficult to see where the next piece of good news really is coming from. The Trump inauguration is going to be very uncertain. We've had some spectacular rises. You know, the S&P is up pretty well 70% in 2 years. I mean, that is extraordinary. So I do think we have to see some caution come in. The rise this year has not been very broad. It's been focused on tech and not in the consumer. And I just wonder if the consumer is now coming under just that little more pressure that will make them a negative next year for the markets rather than the positive it was this year.
Won't tax cuts help, though?
Well, the question is, are people going to say, well, the tax cuts mean more debt, and then what are the bond vigilantes going to do? So I think that's going to be a real issue, and it is an issue. Trump's promised tax cuts. There's something that's very popular with everybody, but of course it's very unpopular about how you actually pay for them. And I think Trump has to be very careful he doesn't stress the tax cuts too much. Otherwise, we could end up with a Liz Truss 2.0 and maybe real pressure on the dollar.
Back to your whole thing about investment myths, though, for next year. Some people hold out a lot of hope that China is going to recover and recover pretty strongly. Do you?
I think that we have to figure out exactly what we mean by strongly. Yes, I think China will recover, and I'm actually calling it the great pivot next year. I think China will do better than the US. I think that Trump does not look particularly good for the U.S. economy. And after all, the U.S. economy has done very well. I think this is a situation where China relatively will do much better. But if we're going to see the outside levels of growth, I don't know. And that's partly because I think China's moved, certainly in the last few years through COVID and past that, into very much the category of being a developed economy. And developed economies have 3, 4, maybe 5% growth at a good period of time. And the reason I say that is if you look at parts of Europe now, you've got places where you can't really see a doctor, where the infrastructure is poor, where the phone system is poor. It reminds me of China 40 years ago. So China's come very fast up this developed curve into really being a developing market. And I think we need to look on their economy as being very much an economy where we're going to see the 3, 4, 5% growth, very much as we do in the US, as we do in other developed markets. So for next year, yes, I think China will do pretty well, but I think it will be relatively well, and we're not going to see the huge growth rates of the past.